All right, testing, 1, 2, 3, testing, 1, 2, 3. The rain in Spain falls mainly on the plains. The ants in France stay mainly in your pants. Welcome to Forex.Today. You guys ready? Well, we got some technical analysis, fundamental analysis, trader psychology, all kinds of things that we can address today. The cool thing is you get to lead. You're the boss. I am just a humble currency trader with 20 years of experience. So ask questions, get involved, but please subscribe and click the like button. Tell YouTube this is quality content. Let's get on with it. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money cannot afford to lose. Ni hao ma! Hey, my name is Wayne McDonald. I'm a currency trader just like you. So ask questions, get involved, take notes, and I will do my best to help. The raison d'etre is that I am here to teach you and help you create trade plans. That means you have to have an idea of what you want to achieve between now and the end of the day, now and the end of the week, now and the end of the year. And today is the last day of the first half of the year. Tomorrow is the first day of the second half of the year. Do you have an outlook for that second half? How do you want to trade that? And do you think it's important? Do you think it's important that today is the last day of the first half? Well, we're going to find out. So again, thank you for being here. Thank you for being a subscriber. Thank you for being part of the Forex.Today YouTube community and providing so much positive energy as you do every single day. Thank you very much for that. I'd also like to thank Traders Way for being part of our community as well. You're a trader, they're a broker. Hey, it's a symbiotic relationship. You need someone to actually execute your trade in the market. You'd think that's obvious, but it's not obvious. Many, if not most brokers, never enter your retail trades into the market because they think you're going to fail because you suck. So they book you. Ha! Well, that can be dangerous, especially if the market collapses and they're holding all your trades. Some brokers went out of business when during the Swiss National Bank debacle. All right. So first, you want a broker to actually enter your trade in the market. That's what Traders Way does. You want them to do it quickly without slippage. Traders Way does that quickly. You want to be paid your swap. See, a lot of brokers, they charge you negative swap no matter what you do. Most retail traders don't even see it. They don't even understand it. So, hey, they figure that's a good way to make money. Traders Way pays you your swap. So again, fast execution speed, pay you your swap, they actually enter your trades. They don't trade against you, all that kind of stuff. And that's how they earn my loyalty and respect. But also think about this. They want you to be educated so that you're a more likely to be a successful, profitable trader. Think about the attitude now. So give them an opportunity to earn your loyalty and respect, tradersway.com. And here we are. Here we are in the world. Okay, and let us be taking a look at this. What we have here, okay, once again, what this tells us is that money is leaving the market, okay, and it's leaving New Zealand, it's leaving the UK, it's leaving Australia, leaving Euro, okay? And this is just probably a blip in the matrix, or maybe because oil is going back up again. Now, will this last forever? Oh, it could. But what do you think? What do you think the probabilities are? And by the way, got my pit pirates going on. Arrgh. He's missing one leg because he sold it and put the money in his Forex account. All right, cool. So, okay, will this last forever? Well, it can last as long as it wants, but it does represent money leaving the market. Okay. And at some point, maybe just maybe, if the fundamentals haven't changed, then there will be a resumption. So as a dollar bear, as a yen bear, I'm waiting. Now, no. Now, no. Now, no. Now, no. Now, no. And I'm looking at this where, and especially US dollar, see, the yen strength doesn't scare me that much because it's not that uncommon this time of year. But this I'm looking at and I'm thinking, what did the Fed tell us, for example? And of course, then the next thing is, what did the market tell us? So I've done this multiple times before, but let's do it again. 10-year T-note yield. Okay, 1.46. You're kidding me. Okay, does that look like there's massive inflation right around the corner? Do you remember that just like 3 weeks ago, 4 weeks ago? The media was going ape crazy, throwing inflation feces around, making a bloody mess of everything. What inflation? Inflation, the interest rate on the 10-year has actually fallen. It was 1.75. Even just in the last couple of weeks, look at that. That's just this week. Check that out. Interest rates are coming down. Inflation expectations are coming down. You know what I mean? All right, on, junkie. Well, you can tell them about the Pip pirate. Arr, arr. Okay, so, right, so has anything fundamentally changed since, let's say, March? Well, let's look at interest rates. What's the relative change? 0% change in interest rates since March. Cool. So, okay, so think about that. Like, is that logic? Is that logic and logical? That there was some hype and then we're kind of back to where we were. Maybe the overshoot, right, is far away. Maybe the inflation is actually transitory. OMG. Maybe the Fed isn't wrong. Maybe the Fed isn't behind the curve. What does that mean? Well, interest rates will stay low for years. Is that good for business or bad for business? Is that good for real estate or bad for real estate? Is that good for the stock market or bad for the stock market? And how does all of that, depending on your answer, how does all of that impact the flow of money for the next 2 or 3 years? And then depending on how you answer that question, are you a buyer of the dip? Is this an opportunity or a threat to your business? Well, right now it's a threat to my dollar bearishness, but a threat can very quickly become an opportunity. Okay? Are you guys following that logic? How many people, like, I don't know, appreciate that logic flow, or I don't know, am I connecting with anybody? Okay. So we probably want to look at this one. Okay. I have a pissy little trade here, but you see what's going on. I know it doesn't look good. It looked good not long ago. Okay. But you see what I'm doing here? It's an early trade for sure, but you see what I'm doing? Thiago says, will the dollar always be the main currency? Well, for me, I'm simply doing fundamental analysis of the reserve currency. Okay. Okay. That's all. In my book, I describe a whole chapter as I call it the greenback guru. So I'm isolating my analysis to that first and foremost because it is important. It's the reserve currency. Okay. All right, cool. So that's all. So I'm asking myself a pretty basic question. If we're going back to this 0% idea, if nothing's changed, then at what price would an opportunity exist? And right now, this area is all I really have for now. And the next one is down in here. Okay, today is the last trading day of the first half of the year. It's the last day of the quarter. Okay, so maybe I'm reading a lot into this and I understand, but maybe we do this for a while. Okay. Okay. But I'm not ready to bet the farm. You know what I mean? Okay. We have to recognize what we got. So it's like a plan A and, well, really, it might be more like a plan B in here. Okay. Yes, for many, it is the end of the fiscal year end. The Radcliffe College, which used to be the women's Harvard, they asked me to donate money today because it was the last day of their fiscal year end. And I'm like, what? I'm like, should I donate money to Radcliffe? I haven't even taken. I mean, I love the Radcliffe college, I guess what you call it, like the campus. It's tiny, but they have this little garden I used to study in at Radcliffe, but I haven't been inside any of the buildings or taken a class at Radcliffe, but they want me to donate money to them, which I thought was pretty cool. I was trying to find the email. I don't see it anymore. I must have killed it. Yeah, you know, Hope, it is an amazing place. And right from the beginning, Radcliffe was so much more than like a girls' Harvard college. It was right off the bat, not designed to be anything to do with Harvard, but very focused on women's studies. And but the attitude was so cool. Like I like the attitude, and I wish I can never quite find it. There's a where it talks about the history and the attitude of Radcliffe, and just the idea, like the Institute for Advanced Study. Like, I just love that. They do a lot of really cool things. Like if you lived in Cambridge and you were a Harvard alum, that's not Radcliffe, is it? No. Oh, it is. Yeah. It's funny. It's such a small thing. I've walked right in front of there, but yeah, I recognize the ramp. I don't recognize the roof. Radcliffe is cool though. So anyways. But since I didn't actually go to Radcliffe or take classes or anything at Radcliffe, I'm not rich enough to start throwing money around like, yeah, it's good. I'm pro women. Okay. Would I buy real estate now? Oh, for sure. Yeah. Okay. Here, let me just close this. All right. Okay. Real estate. So how do you invest into I wouldn't buy, well, you can buy a house. You can do whatever. A house is like buying a TV. Just buy a house. It's fine. The next part is like in commercial real estate. Oh, I guess I should do it this color. In commercial real estate, what do you need? Okay. You need income, like renters. By commercial, let's define this. An apartment building. Okay. Are we in a world in which people are expected to rent and can afford to pay the rent? Well, I think less and less people in America can afford to buy a house. I've said many years ago, the middle class is dead in America. There is no middle class. You're either rich or you're poor. That's it. There is no middle class. I don't know very many people that have one person working full time and the second adult raising the kids. Okay. I don't know people that pay cash for their car. I don't know very many people that have a small mortgage and are very diligently paying it off, like let's say a 15-year mortgage. I don't know very many families that go on 2-week vacations together. Right? Like that was the good housekeeping definition of middle class back in the 1950s. And that was most people. Now, nobody does that, right? So it's just really interesting. But so let's just say even more now, like the American dream that the government used to kind of pitch was this idea that you owned your own house. Well, a lot of people are just not in that place anymore. So all of a sudden now they're going to be renters. Okay, fine. I'm not here to say that's good, bad, or ugly. That's just like, should you invest into an apartment? Well, I think more and more people are going to rent. Cool. And I also think over the next 5 years, the industry is going, the economy is going to improve. So that means we're going to get near the natural rate of unemployment or the natural rate of employment. Which, okay, great. So people will rent and they'll continue renting without defaulting. You see what I mean? So from that, what you do is you create your net operating income. So you're looking at your rent minus expenses, correct? And you got your net operating income. Okay. Now the next part, okay, is you probably didn't pay cash for your apartment building. You probably have a bank as a partner. They might pony up 80% of the money, but only want 5% of the cash flow. That's cool. Maybe only 4%, maybe only 3%. Okay. So, credit. How is the credit market? Can you get financing, and is the financing affordable? And the answer right now to that is hell yeah, it is. And we know in 2 years your mortgage will be more expensive So I would say in the next 2 years, if you were going to buy an apartment building, you should probably buy an apartment building. Morena says, I see many more people renting. Absolutely. So that's all for this, right? So now if you pony up 20% of the cash, okay, 20% of the cash, and the bank ponies up 80%, let's say the bank charges you 4%, okay, of the cash flow. So they get paid first. They want 4% of the cash flow, but they'll pony up 80% of the money. Cool, right? You pony up 20% of the money and you get net operating income minus the loan. Okay? And now you can, well, I would say, and then save some for a rainy day, for a roof problem, a leak problem. Yes, you have insurance and stuff, but you should probably save, and probably every 5 years you need to just redo the sidewalks, redo the landscaping, replace the windows, whatever, you got savings. So after all of that, you can keep everything else. So maybe you get to keep 4%. Net operating, so rent, then you have to pay for the expenses, then you probably have to pay for a manager, and then you have to pay for your loan, and then you have to save a little bit, and then you probably have, some, you're writing off depreciation, but let's just call it investment. You keep the place up and running nice because you also want rents to go up over time so you can have more income. You want to increase your net operating income, right? So the thing is, this 4% is a big deal. If you're paying 6% or 7%, it kills your cap rate. Okay? Which is your expected return on investment, basically, if you put cash in. Okay? So what you want is you want your rent to go up and your expenses to go down. Well, expenses rarely go down, so you definitely want your rent to go up. So how do you get your rent to go up? Well, the market goes up because you invested in a good market and demand for the housing goes up beyond supply, right? You improve the place so it's nicer than all the other apartments in the area, right? That kind of stuff. You don't want your apartments to be ugly, old appliances, vinyl countertops, carpet, popcorn ceiling. Dude, nobody wants to live there. Okay? Okay? HH says, well, how can they afford rising rents if their wages don't go up? Doesn't matter. It's competition. You can't afford it, move out. Someone else is going to move in. I'm not making a social statement here. It's like, should you buy an apartment building? Should you buy it now or should you buy it in 5 years? Okay. Okay. But I'm not talking about people's ability to contribute to GDP and how much they're going to get paid. Like I said, how do you make $1 million a year? How do you make $1 million a year, guys? Create $5 million in value. Okay? So the more value you create for society, your clients, your, such, the nicer apartment you could rent. Okay? If you create 100,000, you're worth 20K. Okay? So the cool thing is when you're trading your own account, okay, you have the value, your contribution is the growth rate of your cash, but you also have to spend your cash, which takes down your growth rate. So when you're trading other people's money, OPM, when you're an opium trader, now you're providing value to clients. Okay? So maybe 10 years of steady trading, you can trade $5 million of other people's money. Okay? So if you turn a $5 million account into a $10 million account, they will pay you $1 million. It's that simple. They'll say, oh my God, you created $5 million in value. Thank you very much for your awesome effort. Here's $1 million for your time. And then you get to manage this money. Okay? And then they're like, oh, you created $10 million worth of value. Thank you. Here's $2 million for your time. Okay? But the thing is, it will take you time. So focus on developing the track record. Okay? Michael says 20%. The interesting thing is like, so as you guys know, I used to be a high-tech startup entrepreneur in the Silicon Valley back in the early days when it was awesome. And there's a rule of thumb when we're doing that. Your employee should never be more than 30%. If your employees are eating up more than 30%, you're not making enough money, or you have too many employees. You just can't afford them because there's other things the money has to be used for as well. And people are important. Oh my God. But if you have a ton of employees, but they're not generating any money, well, you don't have a business anyways. You see what I mean? Like, oh, well, we're a nonprofit. Screw you. Then raise money. You got it, right? Right. So it comes down to value creation. You have to create value, not just do cool things. Right? Anyways, so the 20% rule is, my point is, focus on creating value, not getting rich quick, because getting rich quick is a dream, and that doesn't have much value. Okay, anyways. Cool. All right, so let's go back. I want to go back to the dollars, actually, dollars. And I want to visit this this idea of when. So once again, I think this is interesting. This is the last day of the quarter, the last day of the half, and we are approaching a double bottom. Are we nearing a point in which we should possibly observe a change in trend? Is it 17? Is it 1850? And the answer is, I don't know, but we're identifying these levels. Okay? Bears are loving it right now. Good job. But remember, I told you, bulls will have their time to make money, and bears will have their time to make money. And I'd rather you be consistent than try to do everything. What are the fib levels? It doesn't matter. I don't care about fib levels. Okay. But if you want to see fib levels, there you go. But that's not what we're doing here. Okay. So what we're looking at is a lot to do with the calendar. So we know what I was talking about yesterday, and what I was that in this period here and some more next week, money will come out. It's a money out process. I don't think it's risk off. If it was risk off, the 10-year T-note would be 1.2. Okay. What we're looking at is, inflation is transitory. The market is starting to price that in, that the Fed is right, not wrong. So, looking at seasonality now, okay, I think the rest of this week and part of next week, the money will continue to be out. The question is, 3 weeks from now, will we be back in on this direction? And I'm trying to be open-minded to observe it. I want to see it. Okay? And I wouldn't be shocked if we visit this level in July and then revisit this level in August. Cool, right? So in the macroeconomics class, I'm working on, I want to do one more lesson on the impact of government and central bank intervention or policies, like what we've gone through in year 2000, what we went through in 2008, what we went through during COVID. Again, I want to focus on this because it's interesting as investors. How do we use that knowledge to make investment decisions, and what are the consequences of these? I'd like to hit that one more time, and in particular focus a little bit more on the bond market, the lending market, the credit market, that kind of stuff, because that impacts growth, right? So I want to do one more lesson, and that's a W, right? Is that crowding out? And then I want to do balance of trade. Okay. So where we could break down the current account and the financial account, and how this impacts, money flow. In particular, global money flow. Okay. What do you think? Too esoteric, or do you guys find that interesting? Cash is on at 75. Yeah, I saw that trade. Yeah. Yeah. So cash, that was the one I was on just earlier in the webinar. So it's like, do I have it on this one? Yeah. Oh yeah, we're back above it. That's funny. I just, it's hard for me to coach and trade at the same time. I had one on here. Yeah, it's hard to coach and trade. Anyways, so I had one on there just seconds ago. Yeah, 75 is kind of like the only thing going on at the moment. But notice, so you guys are talking about fibs. You notice I have fibs here. Okay? But this is not a trend, is it? So why would you use a fib? The only reason you use a fib would be a 1, 2, 3. Okay? But right now, this is a double bottom and a reversal of the downtrend. So the next part of this is higher high, higher low, 1, 2, 3 on this time frame. So this is buy it at monthly M2. Okay. It's going to hit monthly M3. And then you're going to buy it again at monthly central pivot point. Whoop. So going back to Michael's question, right? Or to whoever's question it was, Fibonacci, right, are for trends. Okay? So if you were using Fibonacci, the current move right now is down, not up, right? So you would have it lined up like this, and you would have sold, this is what I call the sweet spot. You want to sell somewhere between the 382 and 618. Okay? And that's right. And then you throw into the monthly M3, which is here, weekly M3, and you'll see that this is a pretty basic bearish swing trade. Nothing fancy about it at all. You'd call it a 382 off the weekly M3. Okay? But from a bullish point of view, what we have here is a potential for a double bottom. And are you going to trade that as a plan A? Okay? That's the question we have here. What's up, Jimmy? So he sold his leg and put the money in his trading account. Okay, so okay. David, you need to focus on swing trading, and therefore it would be very valuable if you understood economics and have an attitude of building positions. So right now, again, being the last day of the first half, you should be, this is a start over right now. Okay. Where you have a clean palette. You may have exited all or most of your trades. And we know over the next probably 12 weeks, you're going to be focused on rebuilding. It's literally a new process. Mentally, for me, it's important. Okay, where we are today is important. Not that this can't go lower. Like this tells us we're going to go here anyways. Okay, doesn't matter to me really. Okay, but between now and let's say September 1st, I believe we will have an M greater than 0. Okay. And so what do I do now? If we're essentially should be approaching neutrality now, most people are out. I think a few more people are going to get out after non-farm payrolls. I think a few more people are going to get out next week, but I think 90% of people by next week will be out. For everyone trying to get out, they will be out. So maybe NFP is keeping people lingering around, but by the end of non-farm payrolls, okay, we're in a new market. And everything else to me is dead. I'll retain no prior knowledge, right? You see what I mean? and just start from scratch. When's the next Fed meeting? When are people coming back? Can I buy this? Can I not buy this? Is it going to double bottom? Is it not going to double bottom? Because here's what I want, right? That's what I want. But we also have to get through this level, don't we? And then we got to get through this level. Okay? And I don't think it's going to be a straight shot. I think it's going to go up and then down and then up and up and then down and then up and up and up. Okay? So it's going to be about risk management and opportunity awareness, opportunity action. Okay. Well, I consider the third week of August as the beginning of a new year. Okay. I consider the Friday after the June Fed meeting. Actually, where is that? Here. Okay. Sorry. I consider this over here the last day of the year. Year end. Okay. Mentally, emotionally, psychologically. Okay. And you guys know this too, right? But this is the end, and I'm waiting for the beginning. Okay. Election year, what happens is the fourth year of an election cycle defers from really the third week of August to the third week of October. Okay. So it just delays things a little bit. On says, won't the market in September be down like last year? Maybe, but why? And by the way, last year is not going to be like this year. Okay? So don't say last year, this year, because the political cycle is different. So will the market rally by September 1st? I don't know. I have research, I have experience, but I can do the research and I can prove my theory. But do I know? No, I don't know. But I know what I'm going to do. Okay. But sometimes, like, let's pretend this is August and this is September. Don't look at the price, just look at the time, and I'm going to draw a price. So August sometimes looks like this. And September looks like this. Okay. Other years, depending on market conditions and stuff, it looks like this. So I'm hoping for A, okay, but I'm not shocked by B either. Okay. Well, Marina is right where she says, I take my trades as nothing is set in concrete. Okay. That's right. But to ultimately improve the results, it's like knowing when to hold on to these because you might get plan A. Okay? Knowing that these trades might be worth 1,000 pips and taking 75 pips on them on the long run is costly. Right? Or if it doesn't work out, how you try again. But so there's this idea of sometimes technical analysis sometimes technical analysis tell you the trades are worth 100 pips. But sometimes when you have things like seasonality or fundamentals behind you, sometimes the exact same trade is worth 1,000 pips. Same trade. So if you have a better understanding of what times might be sometimes, because I never know, right? If you had a slightly different outlook because of like seasonality or fundamentals, and you thought there was a more than reasonable chance for 1,000 pips on this trade, would you treat the trade differently? And I would say yes, you should. Okay? Okay. Okay, and a lot of it is attitude because of that. It's not attitude, it's bias. It's not bias, it's sentiment. It's not sentiment, it's conviction. But it will be important. So how many people here have gone through the training course where you have to make 10,000 pips or more in 1 month on your trading account? How many people have done that? And if so, how many pips did you make? Was it 10,000 exactly? Was it 11,000? How many pips did you make in that process? It was an examination too. It was recorded. How many people have gone through that? Olin said 19,000 pips in a month. Anybody else? Aaron says 11,389 pips. Okay. Anybody else? Just 2 people? Really? Was it 3 months or 1 month, Maida? Victor says around 12,000. Anybody else? My point is, you cannot make that many pips if you're only day trading. By day trading, what I mean is you take a trade during the day, and by the end of the day, when you're done trading, you exit those trades. Okay? Nothing wrong with that. And in fact, that's the better thing to be doing now. Okay? But my point is, if you only knew when to simply change the expectation, not the trading style, not the trading technique, not what indicators you use, not what time frame you use, all that kind of stuff. Imagine doing the exact same thing you're doing day trading, but instead the only thing you adjust, again, not the entry, but simply the exit. Okay? You see what I mean? If you simply change not how you enter, but how and when you exit, or even why you exit. All you're changing is the exit. That could dramatically change your year-end results, but knowing when to do it is vital. Okay? Knowing when to do it is vital. And typically, the big downside to the whole thing is you have a tough year and you just break even a lot. I'm not saying like keep buying on the way down. I've never said that once. Okay? But if you break even, because instead of taking 100 pips profit, you moved your stop to break even, and then it dropped 100 pips and knocked you out. That should be the worst case scenario. But what we're trying to do is when let's say you do trade this one on the bottom and you say, well, it is the third week of August, so I'm going to hold, and it comes up and it makes a 90% retracement, but holds. Okay? Now this one trade 100 days later is 1,000 pips. But so is this one, and you're right, and this one, and this one, and this one, and this one, right? And you have 30 trades open, or 40, or 130. Okay? 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 So that's all, right? If we can have this idea of seasonality incorporated in what you do, and you say, sometimes I expect 1,000 pips, but sometimes I am tickled pink with 100. Okay? That's the next step. That's the next step in your trading career. But you got to master the short term first, right? Is that right, made up? Okay. Right. Okay. Cool. All right. Cool. Cool. Fine. Cool. Great. Good. Fine. Fine. So right now, we got to be very, very careful. That's the vulnerability. So if you're thinking about buying at 75, I totally understand what you're doing. Okay? But holy smokes, bro, this is a problem. Okay? Okay? Cool. I just want to mark this now that I'm way back out. Cool. So right now, based on seasonality, like I was trying to explain, now's the time to be shooting at rabbits. Okay? Now's the time to be shooting at rabbits. This is, I think, the beginning, top of the year. Cool. So I'm watching these lines pretty closely, as you can see. Okay. I believe, as I've already marked out, I believe 25 is a big deal. 25 is up here. Let me redo this. Okay. But we already had marked this earlier, right? This we did this like a week ago. Okay. So we're kind of in that zone now. And there's kind of two thoughts here if you're a bear. Okay, 125. Oops, let me do this in a different color. Okay, 125. Double top. The other one is the lower high off of the WM3. Okay, so right now, okay, again, I see this as money leaving the market. I don't know if we're going to get new money back in the market. Yeah, Ronald, you're not going to make 1,000 pips this week. Although you could, like if you're trading, let's say you're trading 5 times a day and you get things right, like, let's say next week does come down here. Can you make 1,000 pips selling between 124 and 119? Yeah, oh yeah, for sure. Yeah, you just this one currency pair, multiple day trades all the way down. Oh yeah, for sure. Okay, so that's monthly, right? Sorry, I think I said weekly. I believe that's monthly. Okay, so I have to watch here and I have to watch here. Okay, bulls bought here and they're done. Okay, their stops are jammed at break even. They're gonna ride the 21 up. Okay, so if you're a bull, you're really, really, really late. Okay, this might have been a time last week where you might have done a 3A2, or in this case, a 50%. You see, precisely 50%. So last week, so if you were position trading as a bull, okay, there was a wonderful M2 to R2, which is perfect. So you know bulls did it, and bulls rebought it here. You see that? Which is exactly 50%. So like one of the things I said a lot in the live trading group, especially the last couple of weeks, is I'm like, oh my God, we need to be very thankful. Okay? The M2 to R2, and I mean very, very precisely. Look at that, guys. Barely a pip under or over. And if you incorporate the spread that's required to enter and exit these trades, it's exact. Like, I'm not joking, exactly perfect. So what do we know? Those are real trades made based on real technical analysis. Another way of saying it is we have the right tools, okay? And these traders may have re-entered here before leaving for the summer. Okay? So if we were going to incorporate that, okay, then this is supposed to go to, like, let's just call it 128. The top of July is 128. Okay? That's pretty simple. The counter argument to that is the flow of money out is done because everyone out, or everyone wanting to get out, would have gotten out. Michael says it's just a coincidence, some say. Okay. Okay. I think that would be naive to say we observed mathematically, right? This and this derived a whole bunch of other mathematical data points, and it says this number here predicts this number here, and you think that that's random noise. I don't think that's statistically possible, but it's possible. I heard that it's statistically possible for Seattle to have hit 109 degrees yesterday. Statistically impossible. Based on over 100 years of weather data analysis, it cannot become 109 degrees in Seattle, but it did. Okay? But let's do it again based on high, low, and close divided by 3. And then from there, do standard deviations above and below. And then from there, hit midpoints of the standard deviations. And then the pattern says 102033. And therefore, the top is going to be 1.2479. And you get this level of accuracy. And you think that's random? Or what? Not you, but you're like, some people think that that's random. Okay. How can I present this information and then argue against their thought process and their point of view? I might argue with someone and there are people in Georgia that they'll argue to me that the world is flat and dinosaurs never existed. So we could talk about it for probably 5 or 10 minutes, and then after that, there's nothing more I can say. I think the world is round. I think there were dinosaurs. Other people believe the world is flat and the dinosaurs are a lie. Okay. Once I've presented my data point, it can be interpreted anyway. And I certainly can't influence someone's decision-making process because it's made on things like biases and life experiences and all these different things. And okay, cool. So I look at that and I say, that's not random at all. Look at this. Do you think that's random, that's 50%? Okay. Maybe. But the thing is, a lot of people are looking at this like it's supposed to tell them what to do. Wayne, well, how did I know I should buy that? Well, you didn't. Wayne, how should I know that I should have sold that? Well, I don't think that's what occurred either. I don't think anybody sold there. I think they took profit there. Okay? All this kind of stuff like, how does it tell me what to do? It doesn't. It doesn't tell you what to do. You need to know what you want to do and then use the tools to say, should I be a buyer again? If I was a bull here and I exited here, would I buy a 50% retracement? Well, that's for you to decide. And will it be up here by the end of July? I don't know. You don't know. The guy to the left of you doesn't know. The gal to the right of you doesn't know. Nobody knows. So what are you going to do? What do you think? I don't know. What does my MACD tell me? Your MACD doesn't tell you anything. Okay? You make the decision. Okay? So bulls will do this. This is what bulls are going to try to do. And bulls should stop being bulls right around there. Okay, right around the 1.618 if you like that, or right around 127.68 if you like that. Okay, there you go. Bulls, I just told you what you're trying to do, what you should expect, and how you should treat the rest of July. Okay, there you go, bulls. That's how you do it. Is that going to work? How the hell would I know? I don't know if any bulls have the cojones to do the trade. I don't know. I don't know if there's any bulls left. Maybe some interns took this trade. Maybe the big boys took that trade, and nothing happens in the next 2 weeks. There's no one trading. There's no new money. Where's the billionaire hedge fund manager going to drop $1 billion on USD CAD? There isn't any. Not yet. Okay. 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 Michael says not many people talk about it on YouTube. Look, I might be completely wrong and delusional, and it's my interpretation of the facts with sort of a spin on it for my psychology to digest what's going on. Okay? But other people on YouTube probably don't have a macroeconomics degree from Harvard either. So maybe that gives me an edge. I don't know. I don't know the other people. Okay? Maybe they haven't been trading for 20 years. I don't know. Okay? But could I be the delusional one? Oh, for sure. Okay? And I apologize, Maida. I'm trying to emphasize certain things. And I suppose when I say things in a different language, I don't fully comprehend the impact of what I'm saying. So if I was out of order, I apologize. Okay? Cool. Yeah, Nuno's right. Sometimes and especially if you're talking to a lot of people, a lot of words and a lot of ideas and we all learn differently, right? And who knows what has the impact. Anyways, check that out. That's your lower high scenario for a bear. I marked this up a week ago. So 124 might be interesting to you. Okay. Now, if you were selling USD CAD and buying Aussie US dollar, it's the same trade to me. Okay? And all you're saying, guys, is you're not making a big statement about the future of the world, the future of the future. You're just saying you bet this double bottom holds. That it's a declaration. Well, a bear shouldn't sell here. Do you understand? Bear should sell here. So if bulls buy, we don't head down to here. If bulls don't buy, then we do head down to there. Okay? Pelotas. All right. Yeah, I don't mean to be offensive. All right. All right. Okay. So I think, right? I think the next few weeks you have an opportunity to think about your trading business. And I hope you take the time to think about your trading business. I hope you take the time to think about not what you do, but how you do the thing you do. And how would you put it in the context of, do you want to trade other people's money one day? And what would your behavior be? What would the process be like? Okay? What kind of trading do you do? How do you present it and package it up so that it's, first of all, understandable, because no one's going to invest into something they don't understand, or they shouldn't. And the second thing is, how does it sell? Like, why would somebody buy this opportunity from you? You're offering an opportunity. Why would they buy it? And by the way, do you need it? I think many people here that listen to these webinars every day, they do want to make a business out of it. They do want to trade 20 years from now. And they do want to look at it as a business opportunity. And you will need a side hustle. And managing other people's money is the side hustle. It won't make you filthy, stinking rich, but it will allow you to have that opportunity. Okay? Because if you keep taking money out of your personal trading account to eat, to live, to put gas in your Porsche, or to put gas in your Hyundai, then you will never become filthy, stinking rich. You might be a really, really good trader. I'm not saying that, but you'll never become filthy, stinking rich. You're the drug dealer that's doing his own drugs. You cannot, every drug dealer knows this. All my drug dealer friends tell me this, that you cannot consume your own drugs. Okay? So, what you're going to need to do is trade other people's money so that you can live off your income from that service that you're providing, that value that you're creating for other people. Okay? You make them $1 million, they throw you 200 grand. Okay? You understand? You make somebody $1 million, they'll throw you 200 grand. Hey, thanks. Thanks for cutting my lawn. Thanks for fixing my leaky pipe. You're just a service provider. But the thing is, if you've made $1 million from someone else and you live on your 200K, well, what about your personal account? Well, maybe you grew it from 25 to 50. Maybe you grew it from 100 to 200. Don't touch that. And then your 200 turns, your 100 turns into 200. It might take you 2 years. It's okay. Okay, but now your 200 turns to 300 in 1 year. Now your 300 turns into 450 in 1 year. Your 450 is now 650 in 1 year. Your 650 is now 900 in 1 year. Your 900 is now approaching 1.4 million in 1 year. Okay? So the side hustle is important. Okay? Okay? Yeah, well, Marina, I'm talking about growth. Okay, so Marina, and by the way, I'm not saying I disagree. I'm not saying you're wrong. I'm just explaining the difference. And so, in like venture capital is not for all businesses. I've seen many businesses approach a venture capitalist like myself and say, look, you should invest into us. We're profitable. And I look at it and I'm like, that's really good. You have a nice, solid business model. But essentially, I'm thinking I could never invest into this. And the issue isn't the profitability or the need or the quality or even the staff. But the issue is if I'm an investor now, I need to scale this. And the issue is scale. How can I get this to from 100 customers to 10,000 customers to 1 million customers? Like, how can I get this big? If I'm going to invest millions of dollars, I got to get this big. And that I know that company will sit there and it'll grow from 10 employees to 15 employees. It'll grow its revenues from 1 million to 3 million to 5 million. And it'll be a good kick-ass small business. Easy to manage, easy to deal with, very predictable, reliable income and growth, and everything is great. But I can't scale it, and I it's not global, it's local. Okay? And so that's all. Like, so I'm saying for those that want to, like, I want to be I want private jets, I want to go, I want to, that person, to get there is scale. Okay. And that's sort of a different attitude. So the side hustle would be important to that because you're going to need growth. You got to grow big. You got to get big. Okay. That's all. And so it's just different. Okay. It's just different. Yeah. But I'm telling you, is Forex a great small business? It's the best small business in the entire planet. And it's what really kind of why Forex was attractive to me personally. Coming from a venture capital background, I looked at this and I said, this is the purest form of business I've ever seen. It is money. See, a lot of businesses, well, all businesses do their business for money. Okay? Prostitutes are not in it for the sex. They're like, you know what? I need more sex in my life. No, they're probably doing it for the money. Okay? Now, Forex, our product is money. Our service is money. We buy and sell money for money. And I'm like, this is the perfect, purest form of business possible. And I was really attracted to that idea. And then you start thinking about it. No accounts receivable, no accounts payable. You don't have to waste money on employees. You don't have to waste money on advertising. You don't just it's pure instant gratification. It's pure invest, return. It's wonderful. It's wonderful. And in of itself, it's awesome. Okay? But for many people, then I look at it and they're like, well, Wayne, I want to turn $1,000 account into $1 million account. Well, you can gamble it all right, or you can spend your entire lifetime to do it. But the key to that, I realized, and this is my own experience, Marina, when I went through and I did my 5-year performa cash flow statement, I went through it and I was playing with all the numbers and I realized many different things, right? And one of the things I realized, so I played around with this idea, how much do I pay myself? Do I pay myself 50%? And if so, I did the model for 5 years. How much money do I have at the end? Do I pay myself 80% and keep 20% in my account so it's growing by 20%? And then after 5 years, it shows me how much. And then I thought, well, what about the opposite? What if I live on 20%? And grow my account by 80%, right, of the profit. And I looked at that after 5 years. And one thing was very, 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 very clear. And by the way, I played around with, do I pay myself monthly, quarterly, or at the end of the year? Long story short, I found the paradox. Okay, there's a paradox when it comes to Forex trading. The less I pay myself, the more money I make. Okay. Well, Marina, you might say, why the other things? That's the side hustle. That's a form of side hustle. So you don't have to touch the money in your trading account. And if you look at that over 5, 10, 15, 20, 30, 40 years, you're like, oh my God, the less you pay yourself, the exponential difference in how much money you make. And then I realized I can then, because it was funny, the first time I did the model based on what I was doing, I'm not joking, I was going to make like $20 billion a year. And I'm like, wait, I'm not trying to make $20 billion a year. Maybe I'm over leveraged. So I started tweaking and tweaking and tweaking. And you can reverse engineer this thing. Let's say you want to make $1 million, then you start with the amount of money you have in your trading account on day one, right? Day one, week one, month one, quarter one, year one. And then you start busting it out based on your trading history. What's your average return per month? Let's say it's 2.5%, month over month over month. And you do all this and you do all these calculations. And then you realize, oops, at the end of a year, I have 130 million, but I'm only trying to make 1 million. So you lower your lot size. And then you're like, oh, I have 10 million, but I'm only trying to make 1 million. So you lower your lot size again until you reverse engineer that you might have 100,000 in cash, but you're trading mini lots. But based on very, very conservative growth models with very, very, very low levels of risk, you'll have $1 million. But the interesting thing is, over 10 years, over 25 years, it has grown so much again that it's more than enough. But my focus then was turned on, how can I lower risk? How can I lower risk? How can I lower risk? Because I don't need the risk, because the risk now, right? Or like the tragedy is I don't simply do the work. Like I throw away, let's say I knew you could make $10 million by the end of your lifetime, 10 million in cash. Okay. Let's say that was just a number. Like if you ran the model, at the end of your career, you'll have a 10 million in cash. Okay. But what if in year one, you throw it away because you blew up your trading account because you were over leveraged? Instead of being focused on doing this for the period of time, instead you're trying to like speed things up when you're not very good, when you're not very experienced, when you don't understand things, but you're trying to like cheat time, and you're cheating time by over trading or being over leveraged in the beginning when the risk is highest. Then you blow up your trading account and you're like, dude, you just threw away $10 million. You're like, but it's only 10 grand. No, it's not 10 grand. It's 10 million. Oh, well, yeah. Okay. And that's how I looked at it. From that, I'm like, oh my God, I got to get small, but then expand. Okay. Not be big in the beginning when I don't know anything. Right. And so that's kind of what I'm looking at. Right. Marina says, so people must have a side hustle to make money. No. A side hustle is for growth. A side hustle is so that you can scale your personal trading. What I'm saying is, if you need $2,000 a month to live, instead of taking $2,000 a month out of your $10,000 account, so, right, if you... right, 20% return in a month, like crazy, right? If you grew your account from 10,000 to 12,000, and then you pull the 2,000 out because you need that to pay your rent, now you're back to 10,000, and now you're focused on making 20% a month, which is, in my opinion, too much risk. So if instead you were doing managing other people's money, and from that you were earning $2,000 a month, now you don't have to, right? Now your account goes from 10,000 to 12,000. And then the next month, again, now your 12,000 probably gets closer to 15 because you're living off of providing value for other people. It's a job, right? Okay. But to that, you're going to have to be able to have a track record and an investment thesis worthy of investment. And I'm trying to get people to focus on that as amateur traders and not getting rich quick. To look beyond today. Okay? So I'm pitching the idea that you should become a service provider in Forex. Okay? Okay, that's where I want you to get. I want you to be in Forex all day, every day. And if you're trying to make big money, then scaling your business is going to be important. And yeah, and having that side revenue, yeah, for sure. Anyways. All right, so I'm going to leave it at that. Okay. Marina says, I got it, but it's going to take a lot of people to invest into. Yeah, maybe not, but maybe. Right? It could be one person with a reasonable amount of money or lots of people with small amounts of money. But the thing is, it grows over time, right, Marina? If one person a month invested with you every month for 8 years. At the end of 8 years, you got a really nice business going. It's also a very good business, Marina, right? That's a nice business. You're doing the same thing, but you spend a little extra time on sales and marketing and customer service, and you spend a little more time, talking with people. But very often, it's an enjoyable process. So in the summer, like right now, you might be exiting the market and kind of thinking longer term, but you also might be spending time with your clients and talking with them and going to barbecues or hanging out on the boat And very often, if they're wealthier than you, they'll say, "Well, come out to my boat," well, and you're hanging out with them. Or it's friend, family, and fools money, but still, you're still hanging out with the crowd. You're still hanging out with people you know well, and you're sharing this enthusiasm for something really interesting. And I'm telling you, people love Forex. They love talking about it, and they love a hero, and you become that hero where, they're able to talk with you, right? Well, yeah, maybe, Marina, but when I was in South Africa, there were lots of people interested in Forex. Now, maybe the average account size is small, but you can still slowly over time build value, build a customer base. It's the same as any other small business, right? When you start a plumbing service, it's hard to get street credit, right? And every time you work for a client and you fix their pipe, A, there's not a lot of money in it, and B, since nobody knows you might be doing advertising, so you're simply doing work so you can buy more advertising. But you do your job well, and then you say, "Can you give me a referral? I want you to know who I am. I do good work." Right? I don't charge too much. I show up on time. I do a good job. Please refer me to your friends. And in the beginning, you're almost begging one customer to be a repeat customer and give you another customer. You do whatever it takes. Well, 10 years from now, you're the best plumber in town and everybody knows it. You don't advertise because it's always word of mouth. So the idea is to focus people, right, not on charging $10,000 to fix somebody's leaky pipe and make $10,000 quickly. It ain't going to happen. But if you're instead focused on doing an amazing job for 10 years, okay, then it's a good business. It's a good, sustainable business with good governance. It's good. It's a good business, and people will be proud to be associated with it. Now, if you're focused on building that, you're managing their money, you're managing your money, and over time, it will grow. And especially if you're focused on reasonable returns with the lowest risk possible, 10, 15, 20, 30 years from now, right, you have a business that can provide more than an income, but a legacy. Okay. And that's what I'm trying to get people focused on. And by the way, you see this all the time in venture capital too, where you have a half decent idea and then you start interviewing the people and you find out they're just trying to get rich quick and they just want to flip this. They want to make a quick buck. It's really cool. It's really trendy right now. Something about blockchain, something about machine learning. You should put $1 million into us. And then you very quickly find out they don't have a lasting intention. And it's not worthy of investment, right? If you can provide the lasting opportunity, right, then people will follow. And that would be a good side hustle so that you can grow your own trading account, right? But yeah, it takes time for sure, Marina, right? It takes time for everybody. My issue is don't try to cheat time. When you decide that that's what you want to do, start doing it. And knowing that it's going to be 10 years. So 10 years from now, what track record do you want to have? Then start trading that way now. The last day of the first half of the year, start that now because 10 years will show up. Don't waste a year. Don't waste 2 years. Don't waste 3 years. If it's now, that's what you want to do, 10 years starts today. Okay, 25-year business plan starts today. And the longer you push it off, the longer it will take because it's 25 years starting from the day you start doing what you say you're going to do. Right? Cool. So, small business? Awesome. There is no better small business in the world. Right? There's no better small business in the world. But you can also scale it like a venture. Okay? You can scale it. You can do what you do for yourself, which is one customer, one client, but you could conceivably do the same thing for 10 clients, 100 clients, 1,000 clients, 10,000 clients. That's what I mean by scale. You can get that bigger. Okay? But ultimately, 80% of the value you create goes to somebody else. But if that means you get to keep 100% of the value you create for yourself, now you get 100% of your growth living on the 20% of the value you create. All of a sudden, you're like, that's a really cool business model. Okay? And it pays much more than getting 10,000 views on YouTube every day. Okay? I might make on YouTube $2,000 a year. Maybe. It's not really a side hustle. Okay? So if you can then create value much bigger than YouTube views and clicks, okay? Cool. Okay? Create value. And the best way to do that is make other people money. Cool. Peace on earth. May the pips be with you. May your profits be above.